what do you make of Chesapeake's bankruptcy? Obviously, not unexpected. We reported this could happen back in mid-May, mid-late May with many others. Does it have any kind of a ripple effect on the industry at all?
Yeah, Brian, I don't cover Chesapeake, so I can't comment too much on them directly, but I would say that the low price environment that we're in right now is very painful for a lot of companies. And I think it just really emphasizes that if you don't have a strong balance sheet, the situation is pretty precarious right now. In their particular case, I mean, I'm not really sure, but I do know that even for very large companies like the ones I cover, there's significant cash burn that's putting a lot of pressure on balance sheets.
Okay, so where do you think this ultimately heads off, Jason?
Well, I think the market is still in significant oversupply. I think that prices are going to remain pretty muted until we start to draw down inventories more significantly. I don't think that'll really be the case until the fourth quarter. So I would expect that prices would stay high 30s to low 40s until we get into next year. Now, I do think that if OPEC Plus is compliant with their production targets, there's a real possibility that we could get inventories back to normal conditions by the midpoint of next year. And I think that's when you can start to talk about $50 sustainable oil.
Okay. Is there anybody that benefits, not from Chesapeake's bankruptcy per se, Jason, but the idea that so many companies have had to hunker down, whether it's Whiting or Chesapeake and others in bankruptcy protection, or have just sort of collapsed on a weakening balance sheet and are not spending any money? Are there companies you cover that, you know, in this damage, they might be able to actually grow or pick up some assets on the cheap?
Yeah, I think that's right. I think overall this industry is ripe for consolidation. And I think that having less access to capital for less capable companies is an important part of rebalancing the market over the medium term. Now, I do look at companies like Chevron and ConocoPhillips, which have significant balance sheet capacity and are generating a lot of free cash flow as potentially benefiting from this overall situation. First of all, because they may have access to cheap assets, but second of all, because this is ultimately the path that puts us on a more sustainable oil price over the medium term.
Who is the best balance sheet company, Jason, in your coverage universe?
Chevron, definitely. Chevron's got very low leverage. Their break-even price is in the low 40s. So they're in very good position to weather the conditions that we're in right now. I would also say the Conoco is in pretty good shape. Both of these companies well under 20% net debt to cap and very limited cash burn.
Okay, any other companies that you're recommending to investors aside from Chevron or ConocoPhillips, Jason?
The only other one is OMV in Europe, and it fits similar characteristics, very low balance sheet leverage and also very low break-even price. We're still pretty cautious in the sector overall.